Southern Arizona housing market stats are out and the numbers are interesting. I'll go over month to month first and then year over year. But first, check this out. So compared to 2023, January 2024 saw a drop in number of sales to 984 units, but an increase in all other stats. So how do we interpret these data? By pulling back over time, we see a continued upward trend in Southern Arizona housing market prices. Case in point, since 2021, we've experienced an increase in median housing prices. This means that most Southern Arizona homeowners who have bought in recent years have established equity, and while there's no guarantee, it's probable that this equity will continue to be protected as we move forward, especially since the feds have essentially penciled in rate drops for the rest of the year. Historically, lower rates typically signal higher property prices. This is because lower rates mean money is cheaper to borrow from lenders, so people can get larger loans while paying smaller monthly payments. So what usually happens? Prices increase. One example, look what happened to home prices after rates dropped into the 2% range during COVID. So it's reasonable to extrapolate that we'll see prices continue to rise throughout the rest of 2024. Now, a potential strategy would be to buy early before the rates drop. That way you can beat higher prices, and then once the rates actually do drop, refinance for a lower rate. But now let's take a look at month-over-month numbers, and this is where things get a little interesting. The same stats that were up compared to January 2023 a year ago are actually down compared to 1 month ago in December. Check it out, boom. Number of sales were down month over month, median average sale prices were down, median days on the market were up. But the number of new listings exploded in January. There was about a 54.9% increase in new listings compared to December. So we went from about 1,266 listings to 1,961. Now, Southern Arizona had already seen a steady decline between October and December of last year. October, we had interest rates peak at around 8.125%. And then for the rest of the holidays, the real estate market is just usually slower anyway. But what I find incredible is we had this nearly 55% increase in new listings pouring into the market, giving buyers plenty of new options to choose from. And yet, the median price fell less than 1%. But why? Looking at the numbers, it's probably because October's 8.125% interest rate made borrowing too expensive for most homebuyers, and November and December's incredibly low inventory gave them few options to choose from anyway. Then January comes, rates fall, people list their homes for sale after the holidays, and all this pent-up buyer demand absorbs the new listings. Now listen, I don't have a crystal ball and I cannot predict the future, but it's statistically unlikely that Arizona will continue to see a 55% increase every single month in new listings. So we'll likely continue to see a steady increase in new inventory throughout the year as rates steadily fall during the same period. Regardless, statistical trends suggest that we're going to see a continued increase in housing prices, not an explosion upward, and probably not a market collapse either.